Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. The Fed met this week, and how much impact do they really have left? Some people think they're irrelevant, especially my next guest, Bill Holter, who's written extensively. You find his work at milesfranklin.com. Hey, Bill, how are you?
Good. How are you, Kerry?
Doing good. Doing good. So you're really thinking that the Fed's becoming irrelevant?
Well, they're meeting as we're speaking right now, so I don't have a clue what they're going to say, but I don't think it matters what they say. We're 4.5 years into this financial crisis. They've lowered rates. They've blown their balance sheet up. 2008, 2009, we come to find out that they lent $16 trillion, and it's probably more than that, but we know of $16 trillion that was lent.
They admitted to that.
World.
That's what they admitted to.
Yeah. And then on the other side of the coin, the fiscal side of the coin, the Treasury has borrowed an additional $5 trillion. So between the Fed and the Treasury, you've got at least $7 trillion has been pumped into the system in the last 4.5 years. Then you add the ECB, their balance sheet, which is now actually larger than the Treasury by a little bit, and the amount of borrowings that those countries have done over the last 4.5 years. So you're 10, 11, 12 trillion euros, and it hasn't done anything.
We have nothing to show for this
nothing
profligacy except more debt, which makes the system inherently more unstable, which will accelerate the final downfall, right?
Right, exactly. There's more debt, which means future higher debt service. We're not even going to get to that higher debt service because this is just going to cascade and collapse. I mean, you cannot have interest rates going higher anywhere in the world now. You've got Japan levered up. Their treasury debt is over 200% of GDP. You've got the U.S. with $16 trillion plus the whatever other guarantees they've got outstanding, which tops up. I've heard numbers over $100 trillion. You've got Europe in the shape it's in. You cannot have interest rates rise. But that's in fact what should be happening right now is interest rates should be rising because there is inflation. There's monetary inflation, obviously. And interest rates should rise because of the additional risk that these governments have.
Right, which is something interest rates are supposed to give you a fair return on the renting out of your money, if you will, meaning different classes of investments or loans pay out different rates. Right. And it's supposed to reward you for the risk that you're taking in making the loan. But
right.
There is no risk premium anywhere anymore except on the poor credit card borrowers. They're the only ones that actually pay interest based upon their risk, and probably they pay too high a rate overall based on the risk that they impose.
That's correct.
And
yeah, they're paying too much because they're not defaulting it. If the average card's 14%, they're not defaulting at a 14% rate. They might be defaulting at 5 or 6%, but still leaves 8% or thereabouts for the bank, which is, an 8% spread is, well, today a 14% spread is ridiculous.
Yeah, and sometimes they're getting over 20, and they're borrowing that money for zero from the Fed,
Right.
and that's a great business, which is this is goes to the heart what most people don't understand how money gets created because when you charge that credit card, you're creating dollars out of thin air. People don't understand that, do they?
No, they don't. And from a macro standpoint, it's basically sucking blood out of the system.
Yeah. Yeah, well, we're all poorer for it, right?
Yeah. I want to go back to the no risk premium. There is no risk premium anywhere, uh, and that causes the problem of how do you value things. And I wrote a piece, I think it was yesterday or maybe Monday. Uh, how do you value uh, anything at all? How do you value a multinational corporation? How do you value a piece of property? How do you value anything if the currencies themselves are not stable? And they're not stable.
Yeah. Yeah, well, that's the whole thing, the store of value. When you have a fluctuating store of value that's going down to zero, then the dollars or any currency unit's purpose is to give a medium of exchange and a store of value. When there's no store of value, it's just a medium of exchange and its value fluctuates from moment to moment, right?
That's correct. I was looking at it more from the standpoint of a yardstick. For a
Hmm.
businessman to put money up to build a business or build a property or buy a company or whatever, you have to have a reliable yardstick. And that yardstick, historically, up until 40 years ago, was an ounce of gold or a ton of gold or whatever. Um, Gold is gold. It is. Uh, it's a. It's a yardstick that does not move. And the problem, the malinvestment that's been created over the last 40 years, has been a function of the yardstick continually being stretched, which is the dollar.
Yeah.
Now, when I say stretched, it's actually shrunk. If you want to look at it that way, each dollar becomes worth less, um, and business people have gotten used to, well, if I don't put the pencil to this exactly correctly, I'm going to get bailed out by inflation, and
Hmm.
that's what allowed, as interest rates came down, that's how people continually levered up and levered up and levered up, uh, figuring out that they'll be bailed out by inflation.
Yeah, well, Will Rogers once said, "Invest in inflation; it's the only thing going up," and that's
Right.
certainly that's certainly the case today, isn't it?
Well, it's the case today, but I mean, what actually happened? Uh, you can look at it and say it was a deflationary event because uh, the amount of bankruptcies, defaults, etc., created uh, less money outstanding or less money on the street. Uh, that the deflationary event was really caused by uh, debt saturation.
Sure.
The system got from top to bottom, from the guy who uses the credit card to the U.S. Treasury who floats bonds. We got to a debt saturation point, and the only way to keep the game going was to lower interest rates to make the existing debt bearable, kick the can down the road, so to speak. But at this point, there's no room to add more debt, and there's no room to raise interest rates ever a quarter of a point, ever.
Yeah, that's a little frightening, isn't it?
Well, it is. I mean, we've completely backed ourselves into a corner.
Yeah. So I'm Joe Sixpack, or as I call him, patronizingly, I guess, Joe Two Pack, and I've got 10 grand in the bank, Bill. What the heck am I going to do?
Well, the first thing you got to do, in my opinion, is you got to look out and say, well, the system's going to come down, and you're going to have to feed yourself. You're going to have to. Hopefully, you have some type of skill where you're not just pushing paper, because pushing paper once the system realigns itself is not going to be a sought after paying job.
Not going to be a profitable endeavor, and it never
Right.
should have become one
Exactly.
anyway, right? We agree on that, right?
Right, but I mean it has, and that's what this has been all about, was just money changing, pushing paper. But I mean, the first thing you ought to do is, if you look out into the future, and if you share my view that the system is going to come down, you need to prepare yourself, prepare your family. Hopefully you live not inside of a city, because that will be untenable. You need to build up supplies to be able to feed your family for, I don't know, 3 months, 6 months. I mean, I don't know how long it's going to take for the system to realign. But I've always been a big believer, once you have that done, you need to purchase some physical junk silver, because it's going to trade.
Mm-hmm. And like, if you're like me, you're wondering, you've seen gold and silver go into these almost year-long consolidation periods where they've traded sharply lower. Gold not so much, but silver trading almost 50%. And people, the way I used to be, I'd get in at the end of the move, and then I'd feel burned, and I would say, well, what do I do now?
I'm not doing this again.
Yeah, I'm not going to, it's never going to happen to me again. Never, ever, right? And yet, what happens? One thing we learned from history, Bill, is that we don't learn from history.
Right. No, it'll make another push. The next push very well may be the beginning of the exponential push, where you see a dollar collapse, some sort of a weekend revaluation, and you easily could see silver. You could see silver and gold jump tenfold over the weekend with a new currency issued.
You think how likely do you think that is?
I think that a new currency is 99.9, I'll even say 100% likely, because the current currency is untenable.
So it's baked.
We cannot pay our debt back unless we print more to do that.
Mm-hmm.
It's a mathematical equation at this point.
Yeah, I know.
So is it going to be this weekend? I have no idea. I don't know when.
Probably not.
But I do know that mathematically, they're going to, like Sinclair says, they're going to have to do QE to infinity. And the word infinity, when you're talking about the issuance of a paper product, also means zero for its value.
Yeah. QE to infinity. He's the first one that coined that. And, he's been pretty spot on all along here. You and I have both watched what he said, and now he's making the prediction of gold 3,500 and higher, and
on this leg.
Yeah, on this leg, and hey, I don't know if that's going to happen or not. I can't predict the future. I almost prefer that it not happen, but I don't really care, is what I guess I mean to say, because it doesn't matter, because when gold starts trading at values that high, then it's kind of game over for the dollar anyway.
Well, gold and silver are unusual products. They're money. When the price of corn goes up, or when the price of beef goes up, people will switch to chicken. When gasoline goes up, they'll switch to diesel or whatever. That doesn't happen in the gold and silver markets. when a currency is in its collapse. What happens is more and more people wake up and they start changing more and more of their paper into the metal, which wipes out the supplies. And along with wiping out the supplies, we're also going to find out that 99 out of 100 people who think that they own silver or own gold via paper means don't really own silver or gold. They own nothing.
Well, and that's going to be blood in the streets.
Right.
Because no one is going to put up with that, because the ultimate fraud, which is what you're describing, it's going to be the emperor has no clothes. It's out in the open for all to see, and it's game over at that point. And that's why they need to keep these markets afloat, the COMEX and the London, LBMA, because the idea of a collapse is just going to bring it all to the front, right?
Well, and that's the risk on this upcoming leg, is that the fraud gets exposed. And if the fraud gets exposed and you own silver or you own gold, are you going to accept dollars at any price?
No, you
No,
can't.
your gold or silver will never come on the street until they reissue a new currency that you have confidence in.
Yeah.
And historically, confidence in currency has been attained when either gold or silver backs the currency.
Yeah, there's no other way. We agree on that. Well, Bill, it's been an enlightening 15, 20 minutes. Appreciate your coming on financialsurvivalnetwork.com. We'll be talking with you and Andy Hoffman on a roundtable, I think, next week.
Monday, right?
Next Monday. It's definitely getting interesting, because the movement of the metals, I mean, it started out at first, those ADP job numbers today came out, 170,000 private sector jobs were supposedly created, although I have real trouble with that number, but let's say it's so. So gold got slammed, and silver, and now, unlike most days, they're staging a bit of a counter rally, and it's going to be interesting to see where they wind up today. So on that note, we will talk to you next week.
Okay, look forward to it.
Yeah, have a good rest of the week.
All right, you too, Kerry.
All right, be well.